Electronics manufacturer and distributor Ellies posted a 40% increase in first half headline earnings per share to 21 cents. Revenue growth for the period was less muted, up almost 11% to 721 million rand. To unpack the numbers now, I'm joined in studio by the company's CEO Wayne Samson. Thanks so much, Wayne, for joining us today.
Thank you.
Well, let's get straight into it, because a 38.8% rise coming through in headline earnings per share. Considering the state of the economy, the health of the South African consumer that Mohammed and I were chatting about a little earlier, how are you rating your performance right now?
We're very happy with our performance. The big growth sector for us was infrastructure electronics, where we redirected the business, and the majority of the business is being done outside of South Africa at the moment, in the mining sector in Africa. Also, we refocused the business into telecoms, combining renewable energy with infrastructure electronics, and overall we're happy. Even on the Ellies side and the consumer side, in a tough market, we've maintained our shareholdings or share position, and we're doing well.
Of course, as you say, there's a differentiation to be made. There's two segments that you cater to. There's the wholesale consumer goods segment, and then you've got the infrastructural electrification segment. Currently, that consumer segment makes up 65% of your revenue, whereas the latter makes up 35% of total revenue. Are you looking at reweighting that? I mean, what's your target moving forward? Is there a possible rebalancing with the kind of restructuring the company is looking at?
Where it is at the moment is where we were actually aiming it to be. When we first took on Megatron in 2008, we were always aiming that Megatron would be a third of the company. Thereafter, the infrastructural sector did fall, and even in our last year's commentaries, we'd said we're looking for Megatron to be back out to the third contributor towards Ellies. So we're very happy where it is.
Okay, so the focus then will be placed on the consumer side of things, because that's where your major revenue is generated. Let's look at that and how you're performing on that side of things specifically, especially where you've got to push through things like price changes, for example, and how easy it is to penetrate the market.
It's not easy trading conditions in the retail sector. As you said, you've got to push through some price changes. The rand has fallen substantially, dollar prices have gone up, and you've still got a consumer that's very scared to spend. So trading conditions are difficult, but we're trying to stay ahead of the pack, especially in a technology type business. Even though it's low tech Ellies, we've got to watch what's happening in technology, try and keep ahead of trends and position ourselves on that basis, that when a new product comes out, we're always there with the technology.
You mentioned expansion across South Africa's borders, and that holding you, some favor. Let's take a look at that expansion and your strategy when it comes to African growth, because we know that we've got majority of the economies on the continent boasting growth, and of course that penetration of the consumer market and the African consumer holds itself in good stead.
The growth into Africa predominantly has been on the infrastructural side. On the retail side or the wholesale side, it's been very difficult. You've got to kind of choose your partners very, very carefully. So we've taken the approach of we'd rather supply agents, and then once we've built up a bit of a history with them and we're comfortable, then we'd have a look at a JV or opening up a branch in our country. So at the moment we've got quite a bit of traction in Zambia, Zimbabwe, Mozambique, and we're slowly growing into Africa, but we're doing it very cautiously. Whereas on the infrastructural side, we're dealing with large mining houses, and so your money is secured. It's far easier to trade into Africa than on the wholesale retail side.
What about on the renewable energy sphere? Because that's something that you've tapped into pretty aggressively.
We're very happy with our progress there. You've got two sides of it. On the infrastructural side, we do telecoms, where you combined infrastructure electronics with renewable energy to set up telecom towers, especially when they're in rural areas. There you were running on generators for 24/7. Now you're combining renewable energy with it. On the retail wholesale side, we started with shop within a shop concepts with the likes of Builders Warehouse, where we put a destination spot in their stores where a person can come and get anything with regards renewable energy or energy saving, from the LED light bulb all the way through to a solar water heating system. So we're trying to educate the consumer and saying to the consumer, listen, when you go for renewable energy, it doesn't have to be a 15,000 rand purchase. You can start off at a 100 rand light bulb and start growing into it slowly and build up your confidence.
Yeah, so you're likely to benefit then in a very handsome way from Eskom's rollout of renewable energy saving products here in South Africa too.
We're working very closely with Seckam, and it's not only renewable energy but energy saving devices. So we're trying to keep ahead of the pack, and we've got a few good things in the pipeline that hopefully will show through in our next results.
Okay, no dividend was proposed this time round, and that due to, you've cited short-term funding requirements to support capital needs. Where exactly are you investing from here on out?
Well, a lot of the investment has been done already. We've built some new manufacturing plants. We've spent quite a bit, 15 million on plant and machinery, and we've invested into stock into the new areas. For example, the LED light bulbs, CFL light bulbs, renewable energy. So we've invested into the different products and the different technologies. So I think a lot of the spend has been done, and we should be reaping the rewards in the next year.
Run us through your gearing levels, because it's been financed through additional gearing, and we've noticed that your interest debt has almost doubled in this period.
We still believe that our debt is still under control. If you have a look at it, our debt to equity, if I'm not mistaken, is 28%, so it's still very comfortable. What we busy doing in our commentary, we said we're converting a lot of the short-term debt because we're using working capital to fund a lot of the long-term projects in the infrastructural side. We're converting it to medium-term debt, and we've already got agreement by the bank to convert 90 million of that into medium-term debt. It was just, as we reported in October, it wasn't done as yet. Was
it just opportune timing, taking advantage of the low interest rate environment that South Africa has been in over the last year or so?
Sure. We saw ourselves and having got advice that our gearing was pretty low. The last thing we wanted to do was go to a rights issue and go to the public for it. And we thought, well, with interest rates right, exactly like you said, rather go for gearing and build your growth that way.
Just how high can you afford to go on that gearing front?
I think we're near where we want to be. We're not looking at very much more than where we are at the moment. So I think we've seen the upper level of what we want to do.
Outlook moving into 2012 and the second half of the financial year?
We're looking positive. We've got a few nice things up our sleeves, especially with regard energy saving. We've gone and tackled in a very different light, and we believe that the results will come through in the next 6 months. As far as Megatron is concerned, the infrastructural side, the order book is very healthy at the moment. So we're looking very confident, very positive in the next 6 months.